What's going on, everybody? Good morning and welcome back to Beat the Bell presented by King Capital. Happy Monday. Hope you guys all had an awesome weekend and hope that you are all ready to go, fired up to trade. It's the start of the fresh week. It's the most important day of the week. It's time to get your ducks back in order. Let's get into it, starting with Diamond Trades.
Alejandro, what's going on? Hope everybody had a great weekend. We have a lot to cover. It's going to be a pretty busy week as far as news and whatnot, so we'll get into that in a little bit.
All right, Money Mander.
Like Noah said, massive week coming up, earnings, Fed, so we'll dive into that in a second.
All right, straight into Fed forecast and economic calendar. It's a big one this week.
Yeah, let's do it. So let's start with the economic calendar for this week. We do have a pretty action-packed week today. We had the National Activity Index out of the Chicago Fed in pre-market here, and then we'll have composite PMI flash at 9:45. Tomorrow we've got Case-Shiller and consumer confidence. Wednesday is the big day with the FOMC interest rate decision at 2, and then Powell's press conference at 2:30. It'll be followed up on Thursday by the GDP numbers. Those will be advanced numbers before the final numbers at the end of the quarter, as well as the weekly jobless claims there. And then on Friday, we've got PCE, a closely watched metric at the Fed, as well as UMISH consumer and inflation expectations. So it should be a busy one, especially towards the end of the week. Things will heat up. We've also got a lot of earnings this week, so let's check out the earnings calendar. The biggest of the week will be on Tuesday with Microsoft and Google reporting, but we've also got Snapchat on Tuesday, Meta and Chipotle on Wednesday, and then closing out the week with Exxon and McDonald's. We've seen that a lot of these big earnings can definitely have larger implications on the broader market, as we saw last week with Tesla and Netflix. So stay tuned for these earnings. This will definitely be some market movers, particularly in tech. Something you're going to want to pay attention to as well. This week, 30% of the S&P 500 companies are reporting. So over 150 of the S&P 500 names will report their earnings this week. So there definitely should be some volatility and some sector-specific implications to watch out for there. Let's go ahead and touch very briefly on last week's trading. So last week, the market was pretty choppy. The rally really gained some breadth, right? So the tech-heavy NASDAQ closed Friday and the week red, weighed on by Netflix and Tesla earnings reactions. The Dow closed Friday green, extending that green streak to 10 straight days now, all the way back to July 10th, that the Dow has closed green. We're seeing some of the leaders of this market rally start to pull back or maybe chop around, flatten out. And some of those more industrial defensive names that weren't getting as much love in the first half of the year are starting to pick up here, with the Dow really pushing on, particularly on the back of those bank earnings. Those strong bank numbers, I think, definitely helped spur some activity in the more defensive side of the economy. Fed Wednesday. So the FOMC will meet Tuesday and Wednesday afternoon. And then Wednesday afternoon, the interest rate policy decision will be announced, followed by Jerome Powell's press conference at 2:00. And he will, want to discuss updates to monetary policy and economic developments, projections, things like that. The market is pricing in a 99.8% chance of a 25 basis point hike at this meeting. He all but came out last meeting and every appearance since then, talking about how they feel pretty strongly about this next 25-point hike after not hiking at their last meeting in June. As we talked about on a previous show, the probabilities for the September meeting are a little bit less clear. So right now we have an 83% chance of a pause, assuming that we get a 25 basis point hike here on Wednesday. So traders and investors on Wednesday will be listening intently to Powell's speech for any additional clarity on the committee's thoughts about the path forward for rates. One thing's for sure, whether it's going to be another 25 basis points, another 50, we're closer to the end here than the beginning. And I think that investors can start to smell, that eventual pivot that will come from the Fed. Mander, what do you got?
Yeah, I want to touch on exactly what you just said. And I think really looking out to the end of the year, like the December bell curve that you would look at for probabilities is probably a little bit more accurate, because it's pretty spread out about where the path of rates could go into the end of the year and really over the next 6 months, because everything's all but baked in this month that we get, a 25 basis point hike. But if we take a look here out over the next 6 months of projected inflation here, really we just got the lowest print that we've seen in 2 years at 3%. But it was coming on the tail end of a 9.1% peak inflation reading in June. And so if we take a look here over the course of the next couple months, as those year-over-year comps and numbers going back from your year-over-year there into 2022, as they deteriorate and get lower and lower from the peak, you can see here, depending on what we get on a month-over-month basis, there's a possibility we get all the way back to a 5.9% inflation reading into the end of the year here. And so we're kind of getting a seesaw here between what we're hearing from the Fed and from economists. Some Fed policy makers have said that they are concerned about the easing in inflation, that it'll be temporary. And we kind of just got this in the fading of rents that we talked about, I believe, last week. You had car payments and transportation costs coming down with energy prices. So that really brought them down here, but they're worried that it'll remain to be persistent. Then you have some economists saying here that moving forward, as inflation continues to come down, it's then making real rates increase, which should continue to help tighten policy without the need for continued rate hikes. So I don't know. I think into the end of the year here, it's going to be very interesting which way the Fed pivots. And here's a look at our month over month. So you can see we really have yet to get a single one that has been negative on a month over month basis. And that's really what you would need to continue to see somewhere even close to that 3% print we just had. Assuming we get month over month prints that are positive in any way, shape, or form, we're going to start curving back up in our inflation readings on a year over year comparison. I think, moving forward, that's what the Fed's going to be watching. And we'll just have to see how persistent rates are as we move forward, whether we're able to pause and hold them there and continue to see tightening, or they have to then go further out on their median projections beyond 25 basis points at the end of the year. But all to be seen depending on our inflation prints moving forward.
Right, yeah. I was going to say, I think the Fed is sort of in a wait and see sort of regime. And I think that kind of like you said, they're in a situation where things are going so well for them right now. And you've started to see like this resurgence of the soft landing narrative, and things seem to be going exactly according to plan. And so they're in a position right now where, you don't necessarily want to be too active. You sort of want to stick to the playbook that's been working for you so far. But like you just said, there is a possibility that you could see inflation uptick again, which would obviously be worst case for them. So they've been navigating the ship extremely well so far. We'll have to see if they can continue to do so throughout the summer months. But that'll wrap it up for us here at Fed Forecast. And we'll pass it back to Alejandro.
All right, great. Thanks, guys. Let's talk about the S&P 500. Going to take a quick look at the system. So we are sitting, as of Friday's close, right at 50 SMA support on the 1 hour chart. You guys know the drill. If that can hold, that's obviously going to be bullish. But in general, trading over the next couple of days, what really needs to be the focus is catching small pieces, because whenever we're going into a catalyst, oftentimes we see chop, whether you're trading ES, SPX. Basically what's going to happen over the next couple of days is the S&P is going to build a base, and it's going to prepare for the next leg, whether that's a leg down, whether that's a leg up. That is obviously what we'll come to find out. But FOMC being the catalyst will likely spur some volatility. And so in preparation for that, it's important to understand not to look for those home run trades over the next couple of days. We are coming off of what has been a massive trend with the S&P 500 rallying over 150 points. As you guys can see here, we got that buy signal, and it was just nonstop. All dips were getting bought. So now we're in that sort of consolidation period, and corrective phase where things get a little bit trickier, and we're getting a lot of ping ponging. We saw that over the last couple of days. So when trading, important to just look for those smaller moves, take profits, and book them when they're available. Okay, so that's what we got. And then on Wednesday, we'll get a much clearer picture, and we'll be watching the system to kind of get an idea of what the next leg is or possibly could be after the S&P spends more time basing. So now we're going to do some Beat the Bell. And I'm going to man the ship today on Beat the Bell because Snipes is not here. So this should be interesting. All right, first question. Green or red? Starting with money, Mander.
I'm going to take green today. I think after Friday's sell or Thursday's sell last week, we could see some dip buying going into earnings coming up this week. So I think we start the week hot here.
I'm going to have to agree with Mander. I'm going to go green today. I think I went red on Friday, which ended up being correct, I think. I don't know if the S&P closed right. I know the NASDAQ didn't, the Dow didn't. The S&P was somewhere in between. We got the stats. Okay. All right. Yeah. So yeah, I'll go green today. I know that, Alejandro's obviously going to go green as well, just with the positioning. That's why he put himself in this position. Let us go first. it's all a little game theory. I respect it. Go ahead, Alejandro.
All right, yeah, I'm going green.
Yeah.
That was the obvious. Okay. So the next thing that I want to talk about is this Twitter converting to X, and this is more of like a like open-ended question. But what are the thoughts here, gentlemen? I mean, Twitter itself, like when you think about tweeting in Twitter, it's just so widely known. It's so well branded. It's become a part of American culture. I'm curious as to what your thoughts are here. Do you guys think that this is a good or bad move by Elon?
I'll kick it off. I really don't. So I'll start from like a personal standpoint. Like I don't like it. I like you said, I'm sort of like used to the whole Twitter brand, and Twitter's been my favorite social media like literally since it came out. Like I love the sort of community that Twitter has sort of built and how it's unique from like every other social media. Um, so I don't know. It's like a bit nostalgic for me, and I don't like to necessarily see it go. But I mean, look, Elon has to be one of the smartest businessmen on earth. If the guy says that X is the best move for the business, I really wouldn't doubt him. Just I guess from a personal standpoint, I'm a little bit disappointed. I think that the Twitter brand and the Twitter name holds some nostalgic value for me, and I know that I'm not the only person who feels that way. So definitely sad to see it go. I'll be engaging in the Rip Twitter trend today, and I'll reminisce about the days that used to be. But yeah, personally, I'm not a massive fan for the business. I'm sure it'll be a great move. Elon rarely misses, so we'll see.
Yeah, I think this is going to be smart. From what I understand, he's trying to go like conglomerate form here and have other social media entities under this X umbrella is what I think he's trying to structure it as. But it'll always be tweeting to me. I'm not going to be like, if I open the app and I see an X under the app there, I'm not going to like it. They changed the logo on the app. I'm not going to like it. It'll always be tweeting to me, and it'll always be Twitter deep down in my heart.
They already did. Go on your
no, they didn't.
Go on Twitter on the computer. There's an X in the top left. A weird looking X at that.
Oh, that is unreal. The bird's gone.
Yeah.
Yeah,
the bird is super gone. But yeah, I'll quickly give my thoughts on this. As Noah mentioned, as you both mentioned, Elon's a very smart guy, so obviously, he has something important planned here. But I personally don't think it's a very good idea. I mean, Twitter is Twitter. It just seems weird. But that being said, it's not the biggest deal in the world, right? Like people aren't going to stop using Twitter. They're still going to, shit on Threads. Like if it becomes X, then people are going to get all hype about X, and there's probably going to be people complaining. And I'm sure Elon's view on it is, bad publicity or whatever the saying is. What is it? Bad publicity is no such thing as bad publicity.
Yeah, you got it.
Maybe it'll get some people more hype about it. People will start Xing, whatever. It's really not that. It's really not the end of the world.
That's any verb. That's any verb. I don't like it.
Yeah, it doesn't even make sense. It really doesn't.
like it.
We might just be the boomers nowadays, and we're getting like sentimental about things starting to change.
Yeah, maybe I am. Maybe I'm getting old. I don't know. It's just doesn't seem right to me.
All right, guys. So that's gonna do it this morning for Beat the Bell, shortened episode today. We only had the three of us, but hopefully you guys enjoyed what we had to offer here. Thanks again to Noah and Mander, who did an awesome job with Fed Forecast. All right, we'll be trading live all day in the Kane Capital Discord. You guys can go to kane-capital.com or scan the QR that is going to pop up on the screen shortly. Again, hope you guys all had an awesome weekend. Hope you guys are ready to start the week strong. We will catch you back here on Wednesday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.